Today I'm joined by Aimee Malan, the MD of DataEQ Consulting and the banking lead on this year's SA Banking Index. And yeah, I'm pretty excited today to actually have this discussion and unpack the findings from the report. But before we get into trends and data, I thought it might be nice to set the scene. So for those new to the index and maybe our methodology, can you maybe just explain what the index is, how we chose the banks, the type of data we analyzed, and what we're really hoping to achieve with this year's report?
Sure. So the SA Banking Sentiment Index is DataEQ's annual analysis of how South Africans feel about their banks, based entirely on online public conversation. For this year's edition, we analyzed over 4.8 million social media posts from platforms like X, Facebook, Instagram, and community forums. Everything goes through our AI human labeler called the EQ engine. What the EQ engine will also do is then filter out noise and any irrelevant content to ensure the accuracy of the findings. As part of this process, what we do is we break down the data into operational and service themes. We look at complaint drivers, high priority conversation, and product and channel performance as well. And really what we've done is we've centered this analysis around conversation for the 8 main retail banks in South Africa. You'll be quite interested to know that for the first time this year, we've also introduced a trust pillar framework that focuses on elements like reliability, fairness and transparency, access, security, and customer care, as well as a vulnerability analysis specifically focused on identifying posts from customers who are facing financial, social, or situational hardship. And the aim really is to give the banks an unfiltered, independent view of customer sentiment, looking at what people are really experiencing, what's working, and where trust and service delivery need attention.
Yeah, I must say I really like this as a data source because it's really unfiltered public opinion, particularly social media. I mean, people say stuff in social media they'll never say in person to someone. It's a very much, as you said, kind of an unfiltered view. So I suppose the most honest perspective that you'll get in terms of how consumers actually feel about you. So yeah, let's maybe jump into the findings. I thought a good place to start would be zooming out a bit and looking at industry performance. This year is the 10th edition, if I'm not mistaken, of the SA Banking Index. And yeah, if I'm looking at the numbers, this year the industry net sentiment was 27%, which is the highest on record. And yeah, if I'm looking at the data here, there's been a definite upward curve basically from 10 years back until now, and a spike actually interestingly since COVID. So maybe just unpack what's driving the improvement across the sector, maybe not just now, but in general. Why the sudden shift in terms of positivity?
So when we look at this uplift, it's largely driven by stronger and more consistent campaign activity. And really what this did was create a significant amount of positive engagement. We also did see better digital interactions and a more proactive effort from banks to communicate with customers online, which is reflected in the data. But really these reputational gains helped sentiment rise overall, even though operational challenges haven't necessarily disappeared.
Okay. And if I'm looking at the shift here, there was a 7 percentage point improvement from last year. I mean, is that worth speaking about as a notable, like a 7 percentage point shift?
It's a meaningful shift. Sentiment doesn't normally swing dramatically year on year, so a 7 percentage point rise is a notable change in how customers are engaging. But it's important to note that much of this improvement does come from the strategic use of campaigns, which have driven and improved both operational and reputational net sentiment.
Okay, then I think something that both the banks and consumers would be interested in is the net sentiment ranking. So basically look at the top performers according to net sentiment. And I see that Discovery topped the rankings again this year. I think last year was the first year they finished in first place, and actually had quite a large improvement this year. Do you want to maybe just unpack what drove that strong performance?
Absolutely. So what we saw for Discovery Bank is that they benefited from strong conversation around rewards and personalized benefits. Customers praised the ease of use of digital platforms and there was quite a lot of positivity towards the partner rewards with the likes of Checkers and Woolworths, which really did help buoy the overall banking experience. The bank also did generate a lot of customer advocacy online through the use of campaigns like Discovery Best Bank and Treat Me Tuesday, which were overwhelmingly positive in orientation.
And other banks or other notable performers in the index outside of Discovery?
Absolutely. So I think one of the most encouraging things to touch on here is that all of the 8 banks finished in positive territory, which is quite a significant thing. We haven't seen that consistently over the 10-year period. And when looking at the banks that ranked alongside Discovery, FNB did come in 2nd place, followed by the likes of ABSA. So they all rounded out our top 3 and did see material improvements in net sentiment. And when looking at the likes of Time Bank, despite them finishing in the lowest position of the rankings, the bank still did maintain a positive net sentiment score. And interestingly, when you strip out that campaign conversation, Time Bank was actually able to gain a few positions in rankings. And that's quite impressive when you consider how quickly the bank is growing. I think, citing some of the recent figures in the news, they've now surpassed over 11 million customers.
Yeah, that's a very impressive story. I mean, especially as banks grow, typically they come under more pressure, more customers to deal with. So to still maintain a net positive sentiment, as you said, is actually probably still quite an impressive achievement. Now, you've touched on it a few times, the role of campaigns. This is a really interesting point. And yeah, we've seen it across multiple reports, not just in banking, how it impacts sentiment positively. But maybe just taking a step back a few years ago, campaigns historically, when I remember first looking at the data, were there really to drive reputational brand performance. So CSI initiatives, sponsorships, those type of things, which are really important. And again, brand reputation is important, but there's also then the operational side of things, which is more your kind of day-to-day customer experience and product experience. But interestingly, what we've seen campaigns do, and I think this speaks to the evolution both of social data in particular as a form of engagement for customers, but also how banks are using it, that it's no longer just impacting the reputational side of things, but also they're using it to drive positivity around things like products and service solutions. Is this a fair assessment to make?
I think that's a fair assessment to make, Patrick. I couldn't put it better myself.
Awesome. And when you remove that conversation, so we've spoken about the importance of campaigns and the industry net sentiment being 27%, which is pretty impressive if you compare it to other industries. Sentiment without campaigns drops by 22 percentage points, which is quite meaningful. What does it tell us about how consumers are experiencing like the day-to-day, the banking experience?
So what it does is it shows us how campaigns are propping and buoying up industry net sentiment. Without them, the sector score then drops to positive 5%, which is a much more modest picture. So what this does is the gap highlights how ongoing frustrations customers face from things like call center challenges to digital downtime and account admin issues really then do start to come to the forefront. So while campaigns create positivity, they don't fix and address service issues. So at the end of the day, the industry did still finish in positive territory, which shows that banks are doing what they can to listen to their customer base, which is refreshing to see. And that despite frustrations, the banks are doing what they can to deliver on those aspects of the customer journey and those improvement areas.
I think that segues quite nicely into my next point. So I suppose if I had to pick up one data point from this year's index, which is available on our website, it was that 1 in every 4 posts was a complaint. Now, when you consider that we've looked at just under 5 million conversations online this year across the various banks, 1 in 4 is actually a heck of a lot of people talking about it and a massive potential risk for the banks. So if you had to kind of summarize like 3 or 4 points, what are the customers most concerned about from a complaints perspective?
It's a great question. And the answer to that is that the biggest driver of complaints is customer service. So when we looked at the conversation, customers described slow response times, unresolved queries and issues, and often inconsistent information being received from bank representatives. And in addition to those customer service themes, we did also see quite a lot of volume around account admin issues, so particularly account freezes, issues with documentation, and trouble in rounding out estate matters. When looking at digital experience, which was another key driver, a lot of that negativity centered around perceived downtime on digital platforms and issues with customer verification failures. And then lastly, when we look at payment delays, there was negativity here and frustration around transfers either not reflecting or not reflecting timeously. And really what happened is that these issues combined together to shape those perceptions of reliability and care.
Okay, so I mean, if I had to take something away from that, banks are, if you look at the number overall, doing fairly well, but there's definitely still room for improvement, particularly around customer service. Then something which I found really interesting, which is first edition, not only for the banking report, but for any DataEQ reports, is the introduction of the trust framework, which you mentioned up front. Can you maybe tell us a bit more about that, and then maybe just highlight the issues that have come through with that?
Great. So the trust pillar framework, as you've mentioned, it's the first time this year that we've done it, and we've introduced it into the findings. And really the aim of this was to try and lend a more structured view to what actually shapes customer trust in banking. So when we look at trust as a concept or as a measure, really what we're doing is we're gauging the perception of customers in banks acting in their best interest. And we've broken that down according to 5 pillars in order to allow the banks to be able to measure that area as well. So when we look at those 5 key pillars, the first one is around reliability, and that has to do with how consistently systems work and payments are processed. The second aspect then looks at fairness and transparency, and mainly what that does is center around clarity on pricing and fees, any disputes or clarity on issue resolution, and communication of key decisions that impact the customer. The third pillar looks at access, and this really has to do with the availability of services, both from a digital and physical perspective. Fourth, we then look at security, and that centers around the protection of both customer money and data. And then lastly, the 5th pillar looks at service and customer care. So this is looking at the support customers receive in the event that something goes wrong or in the course of their day-to-day banking experience.
I think you've kind of covered part of my next question. Why is trust so important right now? But I think more interestingly, we talked about what that entails. How are the banks actually measuring up? Are they delivering, or is there room for improvement?
So we definitely see in the conversation that customers are under financial pressure and they rely heavily on digital channels. So reliability and transparency and fairness have become part of the non-negotiables. At the same time, we have seen increased regulatory expectation and pressure around elements like conduct. So that is on the rise. The banks really are making progress, but from what we've seen, trust is still fragile, because even a small reliability or service failure does have a significant impact on customer confidence.
Okay, there is so much to unpack in this year's report, which, as I said, is available on our site if you're interested. But I think we probably do need to call it there. So maybe just to close things off with a question kind of looking forward to the future. What does this year's data tell us about where the industry is heading?
So I would say that the industry, and what we've seen in the data, is that the industry is moving in a positive direction, but mainly the improvements are still driven mostly by campaigns and reputation. So the next phase for the banks really will be around aligning that operational delivery with customer expectations, because that's where we see the opportunity for long-term trust to be built.
Okay, great. Thank you so much, Aimee. I think it was a really enlightening conversation. And I look forward to seeing the next report coming out. Thank you.
Thank you.